Good morning, good afternoon, good evening, traders, and welcome to the 936th edition of Short-Term Trading Live with Oscar Carboni. 936 videos. Right off the bat, today is Tuesday. It is October 23rd, 2012. It is midday. This video that we are about to do, the analysis in this video, should be valid from today through tomorrow. We'll let you know if it continues to hold through for the rest of the week. But this video is to figure out the rest of Tuesday and what should happen on Wednesday. So let's take a look at these markets. Traders, we are looking at the emini S&P. And right off the bat, let me say this. As we know, futures trading can be extremely risky because what a crappy call we made with the OMNI last night for today. And thank goodness for stops. As we all know, a stop is our best friend, and had we not had stops in today, it would have hurt really badly. So thank goodness for stops. Futures trading is extremely risky and is not suitable for all trading accounts. What did you think about that crappy call last night, guys? I know, I know. But listen, we're going to go over the analysis now together, and we're going to see what made the market break down and what we should do to capture that for Tuesday night through Wednesday. So here we are looking at analysis for last night. If I delete the bar, here's where we were at. The market did get back above this major supported trend line. We're in a big bull market, so we started looking for upside. In reality, here is what happened. The market opened and dumped today, put in a big downward spike. Outside day reversal. The day is higher. The high is higher than yesterday's high. The low is lower than yesterday's low, making it an outside day, but it's heading down. This went up this day. This day goes down, making this an outside reversal down day, not a positive development. So obviously we need to be looking for selling the rallies now and more downside. The other thing that starts to happen now that we've put this little spike in today starts to turn what could have been, you know, the beginning of an up move, holding on to this line right here, thinking that this is going to be the beginning of a new up move. But instead, if you start looking at this, traders, it's starting to put in multiple head and shoulders up here. It's getting a little bit nerve-wracking because now you have an inverted head and shoulders, which turned out to break down. You have this one right here next to it. Look, just grab this and grab this. You have a second inverted head and shoulder. Shoulder, head, shoulder. Then this shoulder right here lends itself to the next shoulder, head, shoulder. So we're starting to get multiple head and shoulders up here. I do not like when I see that. That's almost always a telltale sign that a big down move comes. Now, we have been in a big bull market, so we don't want to start voting for a bear market anytime soon. But this action that we've seen today is not conducive to the bulls at all whatsoever. This action that we've seen today is a big breakdown through major support in the fashion of an outside reversal down day. So our buy failed. We were stopped out. Thank goodness for the use of stops, because in reality, we were buying this down to 14.22 and our stop was below 14.19. So we weren't looking to risk a lot on this trade to begin with, but we were hoping that it would find support. The support broke. That was last night into this morning, Tuesday morning. Here we are Tuesday afternoon. Clearly now we will be looking for downside in this market, especially if we settle anywhere in the lower quadrant of this day. So your weekly emini S&P, just like we seen in last night's video, is coming up next. And I think you are going to see what happened in the weekly does not look good after today, just like we're seeing in the daily. Let's look at that weekly chart. Traders, in this weekly chart, I just showed this to you in last night's video. We were holding the yellow line, but look what happened now. Let me blow this up and give you a much closer look. First of all, soak in the chart. We had this V bottom, rallies up into a really nice parallel channel, finally breaks the channel, V bottom again. Rallies into a nice parallel channel, V bottom, rallies to a nice parallel channel, V bottom. So repetitive patterns. Rallies up into a nice parallel channel, but look closely right here. We are now below that yellow trend line. So on the weekly bar, not behaving well at all. It has breached support on the weekly, just as it did on the daily. So let's continue looking around at these charts and see what else we have in store. We step out to the NASDAQ traders. Again, yesterday's analysis, no bar existed except for this one. We got back up into the parallel channel, looking for buyers to come in at that point because we are in a bull market. Buyers did not come in. In fact, what happened today? Straight down, an outside day. Once again, an outside day means this. The high of this day is higher than the high of the day before. The low of this day is lower than the low of the day before, rendering this day an outside day. Now, the fact that it's settling low and the day before was high, it's an outside reversal down day. So NASDAQ showing the outside reversal down day on the daily, rendering this a sell of rallies. Let's go look at the weekly NASDAQ. Looking at the weekly NASDAQ traders on a close-up look right here. We are now below the yellow trend line. Overall, this is a very bullish channel, but it's not bullish if you pierce the channel and settle below it. Right now, we are lower than the channel, and if it stays this way, we will settle below it. So how quickly one day can make a difference. We were bullish on this day or this week because we settled above the trend line. But immediately, you're now below the trend line, and that changes things. So once again, reason to find caution. Yesterday, the markets looked great. Today, the markets do not look so nice. In fact, I think we need to sell the rallies, and we will be selling rallies Wednesday afternoon, most likely. But let's continue to look at today's analysis, which is on Tuesday. Let's go look at a very interesting chart now, the DAX. Traders, the German DAX, last night we did a video and said, look, it held here, it held here, it held here, and it held here. Here it got close, here it held, and it is here right now. This day does not exist. Last night's analysis, what would make you not want to buy that trade? You see the bull flag, you see it's above support, you would certainly want to buy this if you were doing analysis on this chart. So you look for a buy setup, and the buy setup is, of course, it gets anywhere near this red line, which also represents what is the two bottoms here of this day and this day. So you got these two bottoms this day. You get a red line right here, which is major support, and you would think, all right, you can buy right there. Well, here is what happened on Tuesday. Boom, smash down, big spike to the low end. It probably will pierce the low end of this flag, and now instead of a bull flag breakout, we are heading back down, and we have broken major support. Major support breached. That changes the landscape completely of the way we're viewing our indices. That's on the German DAX daily. Let's go and look at the weekly. Traders, on the weekly, looking like a failure happening right here. Remember last night showed you the parallel channel. We were inside of that parallel channel. Well, after today's drop, we are below it and now starting to show failure at this big blue resistance line. So if that's going to be the case, then the downside is what we look for. And I will move this parallel channel out of the way so that you can see it is starting to have difficulty at this major blue line or major resistance. So on the weekly, the German DAX immediately reverses, and we are now starting to look for some downside. Okay, traders, next on the block is the bond chart. Now, the one thing that the bond chart is not showing us is that the downside in the S&P is as real as what bonds would normally show us. In other words, when the S&P starts to get hit, the bonds usually make a move like this one right here, a big up move. When the S&P is getting hit and the world thinks it's serious, the bonds usually make a big up move. Now, the bonds are having an up day today, but I don't consider this a big up move. Must keep this in mind, however, that there is what's called the FOMC meeting. The Federal Open Market Committee meeting is taking place. It's taking place today and tomorrow. This is the Fed meeting. The Fed decides whether or not they're raising rates, lowering rates, leaving them the same, and how they will speak about the economy. So you'd expect bonds to be muted during this period, but bonds right now are not showing a blast off. In fact, they're showing a very well-rounded topping pattern here. So let's see what happens. We do have a bear flag in the bonds that you can see right here, but bonds are nobody's game until the Fed decides what they want to do. The bonds are nobody's game till after the FOMC meeting ends tomorrow. So we're leaving bonds alone, but we are looking at the rounded top again and recognizing that even with S&P cracking, it's not exploding on the upside in bonds. It's not giving credence to the downside in the S&P or not confirming the downside's S&P. So let's keep that one in mind because it's interesting. And we want to go back to this chart one more time. I want to show you this S&P again because we really need to look at it. Traders, the emini S&P daily bar. This is a horrible, horrible development. With this development, clearly, the market wants to go lower, and we will certainly be looking for the downside for trading tonight into tomorrow. Thank you for showing up. I was hoping that we could see this together while markets were open today on Tuesday so that we could set ourselves for Wednesday. So if you look at this market now, it is starting to put in a new channel, and this is what your channel looks like, and here's what's starting to happen. Now we're starting to get this. If this is going to be the case, then obviously we're going to have a decent down move again tomorrow and end up down here somewhere. So let's see what happens. Remember now, we've broken down below this major parallel channel, major support line. It does not bode well for the S&P. Certainly looks like at least another day to the downside when looking at charts in this fashion. Traders, thank you so much for coming to today's class. I hope this class will help keep you in focus with Wednesday night, Wednesday into Wednesday night. And once again, my apologies for that crappy call for Tuesday, but analysis is a fine art and not a science, and nobody gets this right 100% of the time. Once again, thank you so much. I'll see you at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.